All right. Thank you for being patient while Nathan made his presentation. And if anybody, if you have questions about graduate school, Nathan's a great person to talk to. Um, you feel free to talk to me if you want to. I'd be happy to answer any questions that I can. And if you are thinking about graduate school, the application free day is new to me, but that's a pretty good deal. So if you're going to apply, you might as well apply and save 40 bucks. Okay. All right. Now today we're going to talk about your first test, which is on Thursday. So if you have any questions, today is the day to ask. What we're going to do is we're going to spend some time going over the practice questions that are on your Canvas homepage. So if you go down to practice questions for test one, then we have the solutions, the practice questions. Also, and I just updated these before class, the practice questions and solutions from the end of each chapter are listed here, and they are now updated with the 14th edition for the questions for each chapter that I suggest and the solutions. Okay, so you can take a look at that. Now, let's talk about your test first for just a minute. Your test will be on Thursday. You're going to have 50 questions. Okay, so that's 50 questions. What I try to do is I try to disperse the questions evenly among chapters. So, chapter 1, 2, 3. Now, chapter 4 was the shortest chapter, so there will be fewer questions from chapter 4 than other chapters. Some people ask me about, well, how many problems will we have versus definitions and theory? Okay, it's probably pretty evenly distributed. A lot of times with the first test in here, what people think is they're thinking numbers, they're thinking calculations. And so you study all of the calculations, and you don't bother to read the chapters or study the definitions, study the slides. And that's great. I mean, that's fine. You're going to do well on the calculations, but half the test, or actually probably 60% of the test, is theory and definitions. So as you're studying, as you're preparing, kind of keep that in mind as you're getting ready for the test on Thursday. What else? What questions do you have about the test itself? The formula sheet?
Yeah.
Okay, it will be attached to your test.
Oh, okay.
Okay? It'll be the exact one that you see.
Like, what if we, like, formula in a different way? Is there a way we can, like,
I tell you what, come up and see me after class and kind of explain to me what you're talking about, and I'll let you know. Otherwise, it's just going to be kind of the standard formulas that you see here. It'll be the same sheet. And the reason I give you that is so that you can practice with it a little bit as you're working problems, so that you're used to that, so it's not a surprise whenever you take the test.
Will we have the full class time we take the test?
Yes. Yes. You will have actually, let's see, 45, let's see, 975. You should have until 1:55 if you need it. Okay, 12:30 to 1:55 if you need that much time. Although you're probably not going to need that much time. Okay, I mean you probably shouldn't. Was there another hand back here somewhere?
I've already answered this. Like, is it one more paper or like on the problem?
It's all multiple choice. Yes, all multiple choice.
As far as theories and definitions go, do you think you're going to go more in depth with the questions as far as like reading the book, taking notes?
No, most of the ones will come from the slides and the notes, the definitions, theory, that type of thing. I would suggest reading the chapters simply because it gives you a good perspective and kind of allows you to, I think, understand the material a little bit better. Okay? And the practice questions that we'll go over today, most of these are probably, some of them are more difficult than what you would see on the test. But what I would prefer is for you to have harder practice questions and easier test questions than the other way around. Okay?
Are we able to use our own calculators?
Mhm. Yes. Yes. I trust you enough to use your own calculators. Other questions? And of course, remember, you'll be given the tax table and you will be given the depreciation schedule that we talked about in class. So you don't have to memorize any of that. Okay, good questions. Other questions? All right, then let's take a look at some of the practice questions. And as I said, some of these are more like, for example, if you see some of these questions, you're like, wow, that's a pretty in-depth question. Some of these are going to be more difficult than what you'll see on the test. For example, number 1 and number 2. And these are pretty in-depth, but it kind of covers a lot of information, and so it makes sure that you know the information very well. So if you're good with the practice questions, you're probably going to be good on the test. Okay? All right, so question number 1. Now we'll just kind of go through these. There are 20 questions. And if you have any specific questions as we go through this, please don't hesitate to ask. Okay, so number 1, which of the following statements is correct? So I'll give you a chance to read through this. Might help a little bit. Oh, which of the statements is incorrect? I'm sorry. And this is actually from reading chapter 1. Okay, so what would you say for number 1? Which one is incorrect? Okay, A is incorrect. Okay, typically European firms tend to have fewer owners than large U.S. firms. But again, that's one of those things that, if you're just kind of reading through the chapter and you're reading carefully, you'll pick that up. If not, if you don't take a look at the chapter, then you probably won't see that. All right, number 2, which of these following statements is correct? And again, this is from chapter 1. Okay, so for number 2, which is the best answer? Okay, if you take a look, and again, you have to read these pretty carefully, but if you take a look at through the answers, answer E tends to be the correct answer. Maximizing the income statement item, net income, might not be the best goal for a corporation if the managers are interested in maximizing the economic welfare of the firm's stockholders, that is, the firm's stock price. And we talked about that way back in chapter 1. We said maximizing net income ignores 3 things, and what you should focus on as a manager is maximizing stock price. Okay. All right, number 3. This is a calculation. So if you've got your calculators, you want to kind of jot down some numbers and take just a second to work through this, feel free to go ahead and do that. Now, these are good examples of what you might see on the test in terms of the ratio questions. Now, in class, of course, we had a big balance sheet, we had a big income statement, and you were asked certain calculations from that. But on the test, you may just be given certain variables, like, for example, here, you've got the market price per share, you've got some information regarding stockholders' equity, how many shares outstanding, and it asks you to calculate the market to book ratio. Now, you'll also notice some information here that you really don't need. So basically, what numbers do we need here? Okay, we need the $30 per share market price. We need the $200,000 of stockholders' equity, and we need the 10,000 shares of common stock. Okay, the other information we don't really need. And so in terms of calculating this, I worked through these right before class, so let me see if I can get this to show up. Okay, so the book value is going to be the 200,000 stockholders' equity divided by the 10,000 shares outstanding. So that comes up to $20 per share. So this is the book value, what the stock is worth on the balance sheet. And the question is, what is the market to book ratio? So the market to book ratio is simply the market price, which is given to us, it has to be given to us, $30, divided by the book value, which we just calculated, which is 20. So it's going to be 1.5 times. And that should match answer 8. So does everybody see where these numbers are coming from? Pretty simple, pretty straightforward. As a matter of fact, I'll go ahead and let you in on a little secret. You may actually see some of these questions again. So as you're looking at the practice questions, you might want to take a really close look at them because you may actually run into some of those. Again, not all 20, but some of them again. All right, so this matches answer A, so number 3. All right, number 4, a firm has interest expense of $2,600, total assets of $180,000. In addition, it has operating profit, which is also known as EBIT, of $10,000 and gross profit of $28,000. What is the firm's times interest earned ratio? Okay, here's a question for you. Who can, in very simple terms, describe for me what does the times interest earned ratio tell us? What is it used for? And the name should give you a starting point. We talked about this, I believe, on Tuesday. We said interest payments when we worked number 24 in the back of chapter 3. Interest payments are mandatory. Companies have to make their interest payments on money that they borrow. So the times interest earned ratio is simply gives us an idea of how many times operating profit do we make compared to the mandatory interest payments. And the higher the times interest earned ratio, the more room we have in case something goes wrong financially and we have to maybe pay an unexpected bill, or we have a huge breakdown, or we have a fire at our corporation, whatever. The larger the times interest earned, the more breathing room we have in terms of emergencies. So with this one, the times interest earned ratio is going to be the 10,000 divided by 2,600. And so that is going to be 3.8 5 times. Everybody good with that? Pretty simple, straightforward. All right, number 5, all the following are examples of current liabilities except what? Okay, all the following are examples of current liabilities except which one? A, okay, accounts receivable are as current assets. The others are current liabilities. And actually, I really don't like this one, even though they included it there. But anyway, the best answer is A. All right, number 6. Now, this is a good example of just giving you some information. If you take a look at your study guide, it will tell you you need to know the general makeup of an income statement. So this gives you simply some line items from an income statement, and it says just put it together, okay? So we've got this information, and it wants to know what the net profit after taxes is for this company. So basically, we've got to decide what do we need, what do we not need, and in what order do we calculate this information. So I'm going to give you just a couple of minutes to work on this, kind of try to put it together. All right, now for this problem, now again, we're given quite a few pieces of information. Most of them we'll need, some of them we want. So we're going to start out with sales, which is $3,060. Then we're going to subtract from that the cost of goods sold. So that is $1,800. That leaves us with $1,260. We're then going to subtract from that the total operating expenses, which are $600. So that's going to leave us with $660. Now, based on this, we need to subtract out what do we have left here. We have, now this is the EBIT. Okay, another name for that is operating profit. That is the earnings before interest has been taken out and the earnings before taxes have been taken out. Now we have, let's see, we've got a line item for interest expense. So interest expense is $126. So I will subtract that, 126. That leaves us with $534. Now this is EBT, earnings before taxes. So we still have to subtract the income tax. It just gives us a percentage. It says the company's tax rate is 40%. So if we take 534 taxable income multiplied by 0.40, that's going to give us $214 in taxes that we have to pay. So we're going to subtract that here. And that leaves us with 320. And the question is, what is the firm's net profit after taxes? So this would be the company's net profit. So if you're looking at the question number 6, the answer would be C, 320. Now, let's say that I changed the question up just a little bit. So we've got this information, but I ask, instead of what is net profit, what is the firm's earnings available to common stockholders? And I made kind of a big deal about this because I said if a company has shares of preferred stock, then it's going to have to subtract preferred stock dividends from the net profit after taxes to come up with earnings available to common stockholders. If a company doesn't have shares of preferred stock, if it just has common stock, then net profit after taxes is the same as earnings available to common stockholders. But if you go back and take a look at this question, it does have preferred stock dividend. So if the question is, what is the firm's earnings available to common stockholders, we would simply need to go to our net profit of 320. We would then want to subtract, let's see, where's my pen writing? Okay, so here, so 320 minus 18 would give us 302, which would be the earnings available to common stockholders. Does everybody see the difference there? Why those are two different numbers? Okay. Okay, now that is not on your, I've got the same thing you do, so that is not on your sheet, okay? I just wanted to show you, what would happen if that question were to be asked. All right, so number 7. Which of the following mechanisms is not used by shareholders to get managers to act in shareholders' best interest? This goes back to chapter 1. We talked about the agency theory, the agency problem, agency cost. And basically what we said is that managers oftentimes act in their best interest. Shareholders, of course, want what's best for them, and that's a problem. We call that the agency problem. And so there are certain things that we can use as shareholders to force managers or to hopefully convince managers to act in the best interest of shareholders. And those are things like threat of firing, managerial compensation, the threat of a takeover. But the correct answer is going to be C, a golden parachute. And a golden parachute is simply a contract that's put in place that pays typically the president of the company, although it could be any senior officer. It pays the president of the company a lot of money simply to leave. That's a pretty good deal. If somebody wants to pay me several $1 million to leave a company, I will more than happily leave that company. Okay? If you guys want to take up a collection and can raise enough money for me to leave Murray State, okay, I might be convinced to leave Murray State. That's up to you. Now, you don't see golden parachutes as much today as you did maybe 5 years ago or even 10 years ago. And the reason is stockholders are simply saying, why should we pay the president of our company to leave if they're doing a bad job? But that was a really, really popular incentive that a lot of company presidents had negotiated into their contracts for years because they wanted a way out if things went bad. If they messed up, they're saying, look, I'll be willing to take chances. If I mess up, that's fine. But you actually have to pay me to leave you alone, to leave your company. And that's a pretty good deal. Okay? So if you ever have that opportunity, I would strongly suggest that. That's not bad. All right, so Which of the following statements is correct? Number 8. And again, I'll go ahead and tell you, this is one of the questions that is more difficult than what you will see on the test. Okay, so if you look at number 8, which one is the best answer, the correct answer? The answer would be C. Shareholder agency costs include the opportunity costs associated with constraining managerial freedom, but do not include managerial salaries. This is where we talked about in chapter 1, because of the organization structure. We talked about the inverted V shape of the organization structure, or the Christmas tree shape. And we said that because of this shape, for most corporations are going to miss some investments. They know that. But they would rather do that than have managers at every level being able to make lots of decisions, spend lots of stockholders' money. Maybe they don't have the experience for that. Maybe they don't have simply the capability of knowing what a good investment is or what a good investment is not at this point. And so they're going to constrain management's freedom. Okay, so number 8. Number 9, which of the following statements about the corporate form of business organization is incorrect? This one's pretty straightforward compared to some of the others. The answer is A. Corporation is the easiest form of business organization to establish. That is incorrect. It is the most difficult form of business organization to establish. It's typically more costly, more time consuming. And that goes back again to chapter 1 where we talked about, I said you need to know the advantages and disadvantages of each of the types of business organizations. So proprietorships, partnerships, and corporations. All right, number 10, the annual report contains all of the following financial statements except what? The answer number 10 is B. You will not find a statement of changes in long-term financing. You will find typically an income statement, a statement of cash flows, a balance sheet, and a statement of retained earnings in the annual report. Number 11, which of the following statements shows the portion of the firm's earnings that has been saved rather than paid out as dividends? Okay, that one should be fairly easy too. Statement of retained earnings. We said the retained earnings, I mean, that's basically a savings account. That's all it is. So when a company has a net profit, they can do two things with the net profit, two things only. They can either pay it out in dividends or they can put it into retained earnings. They can save it for later use. So that's number 11, which is C. Number 12, which of the following ratios measures how effectively a firm is managing its assets? Okay, that is D, inventory turnover ratio. And the inventory turnover ratio tells us how many times during the year does the company go through its inventory. When we talked about that quite a bit, we said that's going to vary among industries. Some industries go through their inventory often. Some industries may hang on to their inventory, but they might not turn it over very many times per year. That doesn't mean the company's good or bad. It just means there's a big difference among industries. All right, number 13. If your goal is to determine how effectively a firm is managing its assets, which of the following sets of ratios would you examine? And from the previous question, you probably have a good idea of the correct answer. Number 13, which we talked about in the previous question, that is going to be C. Inventory turnover, days sales outstanding, fixed asset turnover. All right, number 14, which of the following statements is correct? Now, I will tell you this, if you see these here, this stands for days sales outstanding, and this stands for average collection period. Okay, days sales outstanding or average collection period. And if you take a look at this, what you will find is that each of these, there's something at least slightly wrong with each of these statements. Okay, number 15, another calculation. A firm has a net profit margin of 15% of sales of $20 million. If the firm has debt of $7.5 million, total assets of $22.5 million, and an after-tax interest cost on total debt of 5%, what is the firm's return on assets? So if you want to take just a minute to kind of work through this, feel free. Now, I think originally when this problem was written, I think it said something like a firm has a profit margin of 15%. And that caused some confusion for students because when you say profit margin, well, we talked about 3 different profit margins. We talked about gross profit margin, operating profit margin, and net profit margin. Okay, so it helps to determine which one are we talking about. So I went in and added the word net profit margin, which I think simplified the question a lot. So if you're calculating this, we can take the 20 million multiply this by the 15% net profit margin. This is going to give us $3 million in net profit. And then for the net profit margin, we're simply going to take our 3 million. Okay, here. Divided by our 22.5 million total assets. And so that's going to equal 0.1333 or 13.33%. So we've got sales and total assets. Does everybody see where these numbers are coming from? Pretty straightforward. I'm not getting a lot of questions, so you're either really on top of this or you haven't had a chance to look at it yet, or some of you are just kind of in a sugar coma from all the candy bars. One of the 3 is happening, okay? I'm not really sure which. Hopefully it is that you are so prepared already. No, that's not it. Is there going to be a what? A bonus. There are no bonuses. You don't need a bonus on a test that you're this prepared for. Okay? Take my word for it. Now, you've got to do your part of that. You've got to prepare, but you're going to do, if you study for this and you prepare for it and spend some time on this, you will do fine on this test. Okay? All right. So, let's see. Number 16, if a corporation that has been in business for many years, for example, IBM, wants to raise funds by issuing new common stock, its stock will be sold in the blank market. I think that went back to chapter 2, maybe. And that's going to be a primary market transaction. That's where new stock is sold. All right, number 17. Which of the following factors distinguish the banking system in the U.S. from banking structures in other countries? And we didn't talk a lot about this, although this was in chapter 2. The answer is going to be C. Financial institutions in the U.S. have greater limitations with regard to non-banking business relationships than their foreign counterparts. And it talks in chapter 2 about banks being fairly limited in terms of what they can do. Number 18, which of the following is not an advantage of going public? All right, so number 18, the answer is going to be E. Well, E, all of these are advantages of going public. It allows the firm's founders to diversify their holdings. What happens is a lot of times when a company is privately owned, it can be a really successful privately owned company. But what happens is the owners of the company, or the founders especially, they tend to have a lot of their wealth tied up in the company. They can't unlock it. And so once they go public and they sell shares, then that unlocks their wealth. So that's why you see, companies such as Facebook or Twitter or some of the other companies that have gone public and made a big splash in the last few years. Their founders became billionaires overnight when the company went public, and that's because they had a large ownership stake in the company, say 20, 30, 40, 50%. They sold several of those shares, or even if they held on to them, their net worth suddenly became billionaire status. Also, it increases the liquidity of the stock. If you go public, it establishes a value for the firm, because if it's privately traded, a lot of times it's difficult to determine what the firm is worth, and it makes it easier to raise new equity capital in the future. So all of these are really good answers. All right, number 19. Large one-owned public companies can reduce the time required to register and issue securities by using what? Okay, this one's fairly straightforward. The answer is A, shelf registration. We said that's basically where the company goes ahead, fills out all the paperwork, has everything in place, but they simply put the issuance on the shelf. They're either trying to time the market, they're waiting for the market to improve, they're waiting for something to change, and then they can issue the shares quickly. And number 20. A corporation purchases an asset for $50,000. Installation and delivery are an extra $10,000. If the asset has a depreciable life of 5 years, what amount of depreciation can the corporation claim on this asset during the 4th year using the depreciation schedule given to you in the PowerPoint slides? Also, I will give you the depreciation schedule on your test. So this is a pretty straightforward depreciation calculation. You're simply going to take the 50 plus the 10, which is $60,000, which is the depreciable value, and you're going to multiply the appropriate percentage using the 5-year schedule for the 4th year. And so to do this, that's simply going to be the 60,000. If you take a look at the 5-year schedule, you'll see that in year 4 it is 12%. So that is going to be depreciation of $7,200. For year 4. Again, it's pretty straightforward, pretty simple, I think. All right, now it's your turn to ask questions after looking at 20 practice questions. What questions do you have about the test? This is your first test with me. First tests are always kind of a mystery. But I think what you'll find is when I write out a test, I try to write a fair test. That doesn't mean it's easy. It doesn't mean it's hard. I mean, sometimes the material is easy. Sometimes the material is hard. You can't do much about that. What I try to do is give you an accurate test covering the information that we talked about in class. And so when you walk out of here Thursday, when you finish the test, if you walk out of here, if you say, that was a fair test, I'm happy with that. Now, you may walk in there saying that was fair and that was really hard, or that was fair and that was really easy. And the second part, there's not much I can do about that. But if you say it's a fair test, I'm good. All right, so are there any questions about the test, preparing for the test, types of questions, anything else?
This is kind of a silly question, but the depreciation between the 5 years is 6 numbers. Is the top 20% is that like the 2032?
Say that you've got 6 numbers in the 5-year schedule.
The 2032 is the 20 the
That's the first year.
first year.
Yeah, that's the first year. The 32 is the second year. 19% is the third year, I think. 12% is the 4th year. And so that's what we're doing here is we're taking the 60% times the 0.12, which is the 4th year, the 0.12. Does that make sense?
This is the 5 is just like the 5% is just like everything else. Are you gonna give us a piece of like scrap paper with the test too to work out?
I can do that. Typically what I do is, and I can provide an extra piece of paper for you. Normally what I do is you can just write on the test. You can tear the test apart, whatever you want to do. It's just whenever you finish, I just need everything turned back in. Okay, so use it, there's plenty of room, but I will give you some extra paper in case you need to work it out. All right, other questions? If you have questions, I will be in my office tomorrow, probably until about 1:30. I'm guessing I've got an appointment after that. But if you have questions, email me, come by and see me. Study hard. Good luck, and I will see you on Thursday.